Welcome to AM Best Audio.
Welcome to this analytical briefing on developments in the Delegated Underwriting Authority Enterprises segment. I'm John Weber with AM Best. Over the next hour, AM Best analytical staff and industry experts will explore developments within the DUAE segment. This briefing will discuss key performance trends from year-end 2025 and evolving market structures, as well as offer a comprehensive view into the future of the DUAE market, highlighting findings from a recently released Best Market Segment report on the DUAE segment. We're going to meet our panelists in just a moment. Now, we may mention the subject of financial strength ratings. A full explanation of AM Best ratings can be found on our website at ambest.com. The opinions expressed by our non-AM Best panelists are theirs and theirs alone and do not necessarily reflect the opinions of AM Best. Now, if you have a question for our panelists, please use the question feature on your screen and we'll do our best to recognize it during our briefing today. And now let's meet our panelists. First, we welcome in Matthew Jones. Matthew is Senior Vice President, MS Transverse. Matthew, great to see you again.
Thanks very much for having me.
Next, let's say hello to Stephen Nigro, Managing Partner, TAG Financial Institutions Group, LLC. Welcome back, Stephen.
It's great to be here. Thanks for having me.
Last but not least, here in our AM Best studios, we have Jacqueline Lentz, Senior Director, AM Best. Jackie, as always, good to see you.
Thank you for having me.
And we're going to kick things off with you today, Jackie. Talk to us a little bit about AM Best outlook on the DUAE segment.
The outlook for the Global Delegated Underwriting Authority Enterprises, DUAE segment is stable. We revised it from positive to stable in December of 2025. It continues to be an important go-to market for insurers and reinsurers. The stable outlook recognizes challenges related to added scrutiny on DUAEs relative to the prospective long-term profitability of portfolios being built with these carrier partners. The focus on profitability is leading to more selective deployment of capacity for DUAEs, however. And up to this point, capacity has been supported by growth in the E&S market, but we have seen E&S moderating over the past 18 months or so. We expect surplus lines insurers will perhaps temper growth opportunities as competition increases and execution risk calls for more measured growth. We do expect growth drivers for the segment, such as diverse capital sources and continued investment in talent and technology, to remain. So these positives will partially be offset by the emerging headwinds, such as more partner-specific selective capacity, tighter economics for renewals, and an increased scrutiny of programs. And then as the MGA market continues to mature, partnerships will need discipline in building portfolios. This comes despite many seeing the need to manage through some adverse development and consistent pressures in some of the longer tail casualty lines of business.
Jackie, can you walk us through the performance assessment process?
Sure. The PA process is based on ongoing dialogue between AM Best analysts and DUAE management. For an initial PA performance assessment, the analytical team would meet with the DUAE's management, collect both public and proprietary information, which would then be used to conduct an analysis based on our PA methodology. Once an analyst arrives at a PA recommendation, the recommendation and supporting materials will be presented to an assessment committee that will then vote on a final outcome. A performance assessment can be either public or private, and after the initial assessment, PAs are generally updated on an annual basis or when there's a significant development.
What are the key components of AM Best PA for DUAEs, and how do they differ from traditional credit ratings?
Our performance assessment for DUAEs or MGAs is interactive. It's an interactive process that provides an independent and objective non-credit opinion on a DUAE's relative ability to perform services on behalf of its insurance partners. There are 5 components to the PA, which include underwriting capabilities, governance and internal controls, financial condition, organizational talent, and depth and breadth of relationships. Each of these components is assessed and scored, which is then aggregated into a total score that translates into a PA assignment ranging from PA1, exceptional, to PA5, weak. However, a best credit rating for a carrier is a forward-looking, independent, and objective opinion on an insurer's relative creditworthiness. Similar to credit ratings, though, a performance assessment on an MGA includes a range of qualitative as well as quantitative measures that are used to assess the DUAE. And of course, with credit ratings, there's more focus on risk-adjusted capitalization, our capital model, and the evaluation of a carrier's balance sheet strength. This is different for performance assessments, given that most DUAEs are exposed to little, if any, insurance risk. And given the fee-based income nature of a DUAE, there's more emphasis in our analysis on their ability to generate and sustain profitable underwriting results and to write profitable and sustainable programs for their carrier partners. Our website does have more details on both the performance assessment and, of course, credit ratings.
So, Jackie, how are premiums trending between exclusive and non-exclusive DUAEs?
So, since 2020, based on the data in our report that was recently issued, most of the premiums generated by MGAs have been through non-exclusive contracts. Exclusive relationships, though, have been expanding for several years, and 2025 marks an uptick in this category. This aligns with some of our carriers who are focused on doing business with a smaller number of trusted MGAs, especially if they have a track record of generating strong underwriting performance and have the operational scale to handle the delegated responsibilities. Although many carriers might prefer an exclusive relationship, the market is characterized by many independent DUAEs who have their own specialized niche or underwriting expertise, and they engage the market on behalf of multiple insurers. While non-exclusive relationships seem to allow carriers greater flexibility in their portfolio, the report shows premiums in this segment growing year over year, but at a somewhat slower pace than exclusive relationships. So with non-exclusive sources of premium, perhaps it is easier to exit an underperforming segment or easier to adjust a portfolio in response to deteriorating loss trends or changing market conditions. Having the ability to generate diverse sources of premium across multiple MGAs may allow a carrier to be more resilient, mitigate underwriting concentration risk, or better manage reinsurance needs and availability. This diversification ties into some of the growth we're seeing in specialty and E&S. Both types of relationships, exclusive and non-exclusive, are essential to the market, but the subtle shift and slight increase in exclusive relationships suggests that carriers are becoming more deliberate about where they are placing capacity.
All right, Jackie, what services do DUAEs provide to their carrier partners, and what trends have developed?
From data filed in the NAIC statement and in Exhibit 2 of the AM Best report, MGAs entered 2025 with slightly broader delegated authority than in 2024, reinforcing the trend of carriers relying more heavily on DUAEs to perform functions typically done at the carrier level. The most noticeable shift is in underwriting authority, which increased from approximately 72% of MGAs in 2024 to over 75% in 2025. This is a meaningful jump. Carriers seem to be increasingly more comfortable allowing DUAEs to price and select risks directly. In a market where underwriting discipline is essential, this expansion reflects trust in an MGA partnership and the niche expertise and data-driven capabilities they have. Claims adjusting and claims payment also rose modestly year over year, indicating that more carriers are outsourcing claims handling to MGAs who may have specialized operational infrastructure in this area. The industry is pushing for efficiency and improved customer experience, areas where MGAs can outperform traditional carriers. Meanwhile, binding authority, almost the foundation of a DUAE function, remains high and essential to the MGA partnership. Together, this information signals that carriers continue to selectively delegate critical functions to MGAs, functions that affect an insurer's bottom line. So there must be a level of trust and strong oversight with any DUAE involved in these processes.
Excellent presentation.
Thank you.
What do you say we bring in our outside panelists, Jackie?
Absolutely.
And Matthew, we're going to start with you. Why has the DUAE model gained so much attention in recent years?
So, well, first of all, thank you very much again to the AM Best team for having me on today and for being able to join this conversation. I think it's a number of different things that are at play at the same time. And I think it really starts with the depth and the quality of the underwriting talent that is moving towards a more entrepreneurial segment of the industry. What we're observing is that many underwriters appreciate and prefer the kind of the financial upside and the flexibility that comes with being part of an MGA or DUAE structure versus kind of staying within a more traditional carrier. But not only that, the folks that are backing these entities, the capital providers, they see DUAEs as a kind of fast, capital-light way to enter, niche or specialty lines of business. And then I think on top of that, we have, of course, we're all seeing the headlines in the media. The advances that we're observing in technology are also enabling MGAs to spin up much quicker. Those advances in technology are lowering the barriers to launch. And I think what we're seeing is that teams are able to achieve a lot more than they were able to with fewer people, given the advances that we've seen over the last few years. So I think it's a number of different things that are all coming together at the same time and at the right time.
Stephen, what factors are driving increased investment interest in the DUAE space?
So, Matthew, I agree with everything you just said, and I'll add to it. What we're seeing in our practice is a fundamental reconfiguration of the insurance value chain, and DUAEs are part of that structural transformation where there's a pivot to the MGA, this unbundling of that value chain from insured to reinsurance, where it used to be sequential and things were largely embedded in carriers, are now burst into components that could solve a risk transfer problem. So we're seeing that, and hopefully we'll talk more about why that reconfiguration is happening. But from the perspective of why there's an interest, because of a convergence of technology, fronting carriers, collateralized reinsurance, alternative investment into the space, technology, and is all converging at once. It's funny because I talk about the modularization of the insurance value chain, and now all of a sudden I'm talking about convergence. So I think I have to make up my mind somewhat. But what's happening from an investor perspective? Look at the growth in the DUAE segment. Look at the fact that there's a relative insulation from balance sheet risk. There's recurring revenue. There's high margins, and there's this flexibility. Where the MGA now is the center of the focus, similar to sitting in the middle of a rectangular table at a dinner party and pivoting to both sides of the table and keeping both risk capital and distribution aligned. So I think that if those factors are really creating a lot of investor interest and making it a lot easier for investors to invest in the value chain.
Stephen, you mentioned the value chain. Has the value chain of the industry changed as a result of MGAs and DUAEs?
You're speaking my language. So I put my pen where my mouth was in April by co-authoring a white paper on the reconfiguration of modern insurance, and specifically the modularization of the insurance value chain, because we were seeing it in our practice. So we're investment bankers. We do mergers and acquisitions and capital raising. And all of a sudden, about 2 years ago, although I probably can give you milestones in the past when fronting back in 2016 started to just grow exponentially, where there's hints to what was happening. But about 2 years ago, we started to see clients come to us for other than investment banking services. Find me distribution, find me capacity, form a captive, form an MGA, form an insurance product. This wasn't possible 10 years ago, where now data is available. It wasn't always. Technology is cheaper and easy to implement. Fronting carriers proliferating, collateralized reinsurance following, filling risk financing gaps, and alternative investment through innovative vehicles, and looking to this space to transform their capital into an insurance product. So that white paper was a response to me trying to figure out and gather empirical support for what I was seeing in our practice. And I think that, I'm going to continue on for that white paper and start to go into each one of those segments and write more about it and explore more about it, because I think it's here to stay.
Stephen, how are DUAEs changing the traditional insurance distribution landscape?
Well, I think it's changing a lot more than that, but the short answer is that insurance distribution is becoming more consultative, more collaborative, more innovative. They're actually grabbing these components that I speak about and applying them to a risk along the risk transfer continuum, where it no longer is broker, wholesaler, MGA, carrier, reinsurer, capital. It's now little pieces that you can draw upon to solve these problems. So I think distribution is becoming more important, and more pivotal and more sophisticated, if I could.
Matthew, what characteristics distinguish the most successful DUAEs from the rest of the market?
So one thing that's interesting is that every MGA is genuinely different and has its own founding story and its own unique approach to how it evaluates risk. But there are some common characteristics that I think we see across the board. So the first thing that I would say we look for when it comes to finding successful partners is deep underwriting expertise. We, at the very beginning of the life of MS Transverse, decided that we were going to be a gross line underwriting company, which means we are reviewing every program opportunity as if we are keeping the entire program ourselves, even though we are a hybrid fronting company. And what we're really interested in is meeting with and partnering with underwriters that have got a genuine expertise in a given specialism, rather than kind of broad generalist expertise. The next thing I would say is we're really looking for evidence of really strong data and technology infrastructure. We talked a few minutes ago about the importance of technology and how that's playing a role going forward. It's not just a case of kind of telling us, it's about showing us. And I think that's also been made easier a little bit with some of the advances that we've seen that we can refer to a few minutes ago. The other thing, and this really ties closely with underwriting expertise, is seeing evidence of disciplined growth. We want to be able to see, and one of the things that I would say distinguishes a successful MGA from an unsuccessful MGA is evidence of being able to show profitable underwriting results over time. And that's rather than just premium growth, just top line growth. And it's rather than just being able to point to a single point in time or a single year. So that kind of consistent delivery, I think, is really important. But the other thing that I would kind of refer to is, stable long-term capacity and paper partnerships. What we observe is that those folks that are kind of transitioning through paper on a regular basis, kind of every 1 to 2 years, it correlates with less successful MGAs. We want to be able to see evidence of kind of more strategic and deliberate and thoughtful partnerships rather than kind of, as I said, more transactional relationships. And so when you look at all of those, typically the one thing that accompanies all of those is experienced leadership. So folks that have been there, done that, they've got the scars, they've got the stories, and they really know, what to avoid and can draw on kind of many of those lessons over many years. And typically, that experienced leadership is looking to put in place some kind of evidence of alignment of incentives. They're not waiting to be asked for it. They're proactively bringing it to the table. And it certainly sounds like that's the kind of thing that Stephen's also involved with based on some of the conversations that he's having. So people are proactively coming to us and kind of talking a little bit about those different alignment structures and how they can be best optimized for all of the different kind of participants in the value chain.
And Stephen, it looked like your ears perked up when Matthew said deep underwriting expertise.
Well, I think, with great opportunity comes great responsibility. With great growth comes increased complexity. Look at the questions Matthew's answering. That is really what we're seeing, where the challenges are that, all these things, my ears may have perked up. I think they perked up a little bit after underwriting expertise and discipline. Because if you look at the first part of my career, I'm more compliance oriented. Finally, we're starting to look at governance, internal controls, financial reporting. It's all of this. It's this great responsibility. I have the luxury of being around when MGAs weren't quite as sophisticated as they need to be now, because reinsurers, capital, hybrid fronting companies are asking questions that are really important for MGAs and DUAEs to answer and to implement into their own framework. When I have an M&A client or a capital raising client, I always tell them, get ready beforehand, become institutionalized early. And I think that the performance assessment, that framework, should be applied to MGAs no matter what, whether they get the performance assessment or not, because that framework is truly going to be important for their success.
One of the interesting things that we're observing now is that more and more DUAEs in the market are using the AM Best the performance assessment structure in order to be able to kind of determine their own progress within, say, a 6-month or 12-month period if they're engaging in transformation initiatives, or if they're working towards bigger, broader, long-term goals, using that as a reference framework before they start to engage formally in that process seems to be something that is becoming more and more popular.
Well, we appreciate that, and we are happy to help organize the thoughts around MGA processes and stability.
Matthew, what are the biggest opportunities you see for DUAEs over the next few years?
Well, I think the answer to this, the challenge with this question is shortening it down to a handful, because the amount of opportunities that are in front of the DUAE segment is enormous. I would say that one of the things that we're observing at the moment is very much a return to the roots of the DUAE space. And by that, I mean deliberate focus on specialism and kind of certain specific niche lines of business that an MGA can really excel in. If we go back to the beginnings of the segment, it really began with underwriters breaking out of larger insurance companies because they had a specific expertise in a certain line or set of classes that they were able to kind of bring into an MGA setup and enjoy the benefits of that, certainly from a financial perspective. So certainly, we are very excited about the opportunity to see more and more programs come to the market that are focused in certain specific areas. Again, I feel like we keep talking about this, but certainly the continued and enhanced use of data AI. I don't know how we've managed to get 25 minutes in without using the word AI, but there we go. If anyone had that on their bingo card today, that we can cross that one off. But AI is certainly a huge opportunity. And it's a really important kind of, the really interesting challenge, I should say, when it comes to AI is striking that balance between being opportunistic and kind of using the technology as it develops, but also being deliberate and understanding how you want to use that technology and what the end goal really is. Maybe we can talk about a little bit more about that in a few minutes. And then again, if I come back to kind of what we're seeing amongst some of the most successful MGAs, I think one of the biggest opportunities for many DUAEs is to develop deeper, more strategic partnerships with a select number of carriers, be those hybrid fronting carriers such as MS Transverse or other carriers that bring different things to the market. And then finally, I think those of us on the call today are largely focused on the US market, but really, really interesting to see the development of the model outside of the US. Certainly in the UK and in continental Europe, we're seeing the proliferation of MGAs now, kind of again seeing many of the trends that played out in the US market, bringing many of the learnings from the US market and taking those into other markets. So very, very exciting kind of times ahead, I think.
On the flip side, Stephen, what challenges do DUAEs face as they continue to grow and scale?
Yeah, I think it's employing that framework. I think it's really becoming institutionalized with regard to not only underwriting and relationships with distribution and so on, but also the governance, internal controls, financial reporting. This did not exist years ago. And it's well overdue in order in order to be successful for them. So I think that is in itself a challenge. MGA started as underwriters. Premium growth was once the most important thing. Not so much anymore. Now it's really underwriting discipline, loss results, and now thinking about the modularization that where they're actually pulling in and managing the ecosystem of here, where they're pulling in capital and dealing with capital providers, whether it be insurance or capital markets, and technology. Now they've become technologists. Data, AI, how did we get this far into it? AI will be transformative. It is transformative. So much so, after a 40-year career, I've seen transformation. I started my career where spreadsheets were a piece of paper and a pencil. I've seen the internet, email, even fax machines come about and make things faster. Nothing, even cumulatively, will compare to what's going to happen here with regard to not only the basic blocking and tackling of rate, quote, bind, issue, and report, or communicate with brokers, but also with the correlations that are going to be made from an underwriting perspective. So I think there's a great challenge for MGAs now to draw upon all these disciplines and act as the host and director of the insurance value chain ecosystem.
I think, if I may, one of the other challenges that I think we've observed is for MGAs is picking the right capital partners to work with over the long term. And I'm sure that Stephen sees this firsthand. One of the things that we look to do at Transverse is bridge the insurance world with the financial world and the kind of investment world. And that kind of is part of our heritage, being many parts of the management team coming from the investment side. And if I just come back to kind of maintaining that underwriting discipline, one of the things that's really important for us is to understand the source of capital behind MGAs, because that really influences the kind of philosophy behind that MGA business and really kind of helps to inform our kind of review of whether that MGA is a kind of top line focused business or are they, as Stephen was kind of saying, like bottom line kind of profitability focused? Are they going to be looking out for growth first, or are they going to be looking out for the loss ratio first? So that's something that's really important. And I think what we've seen is, our MGA partners really being very, very thoughtful, even having conversations with us about who they should be talking to from a capital perspective to make sure that they've got the right support and to make sure that they're philosophically aligned with the folks that they're going to be, doing business with or partnered with from a capital perspective over the next kind of 5 to 7 years or so.
Yeah, look at what's happening, and making it easier for investors where in the past, let's assume that they would only have to invest in carriers in order to enter the ecosystem. Now there's so many more alternatives for them to come in and really place their capital well. So that is one of those challenges, picking the right capital partner and performing where it used to be a lot more difficult for that to happen. So it's an interesting, and you watch the innovative ways that they're coming in, the growth in ILS or sidecars or collateralized reinsurance, is just growing exponentially, and the demand for that entry point is solid.
Matthew, I want to dig a little bit deeper into that. How do you choose the right capital partner?
So for us, we like to spend time with a prospective MGA partner over quite a long period of time before we formally kind of align on documents and contracts and start the trading partnership. But what comes with that is, within our asset management division, we have a range of experts that will spend time with many of the private equity firms that are funding MGAs and similar businesses in this space. And then what we do is within kind of regular meetings internally, we'll marry those two teams. We'll bring them together to be able to have a conversation and kind of round out a view of what's really happening within that MGA and how we think that MGA is going to develop over time. Again, understand what their motivations will be, how they might think about, dealing with challenging situations. And we'll also draw upon, what we've observed in the past. Many private equity firms that are interested in this space, they will have an investment in an MGA for a number of years. They'll move out of that investment. Someone else will come in, and then they'll move on to the next MGA platform that they're looking to support. They themselves are looking to, extract value from some of the lessons that they've learned in the past. And so, we will be able to kind of draw lessons from, how did they behave? How did they support that partner previously? And then when it comes to, Stephen just mentioned ILS structures, for example. So we are active in that space, both on the property and the casualty side. And again, it's really important for us to spend time with those capital partners, understanding if they're investing directly into a vehicle that is going to be supporting one of our programs. Really important for us to understand the depth of the insurance expertise. Do they have a full appreciation for the dynamics of the market? The hard versus soft dynamics, for example, really, really important kind of context points for us to take into consideration as we move forward with a prospective partnership, or as we think about growing a partnership that we already have.
Thank you, Matthew. Just a reminder for our viewers, if you have a question for our panelists, please use the question feature on your screen, and we'll do our best to recognize it during our program. Stephen, we touched a little bit on this already, but how important is technology in supporting the DUAE business model?
Well, I think it's absolutely essential, and to make all the connectivity between the various modules or components of the value chain, it is extremely important. Not only AI, but modern cloud platforms, cloud-based workflows, APIs, all this coming together to solve almost every problem or solution for an MGA in its operations, its analytics, its underwriting selection. All that is really important. AI, I think is like we're saying, it will identify underwriting correlations. It is already. And it'll do both on the basic blocking and tackling of insurance, all the way through, policy issuance and underwriting, et cetera. Interesting observation is too on AI. Yesterday, I was speaking to a service provider, an AI-based technology company that provides MGA infrastructure, and they do things. I'm witnessing it, where we had a client that was forming an MGA who had two service providers to provide them infrastructure. On January 9th at a meeting, they were selecting between one of the two of those. Somehow in April, I was having a conversation with this group who said, could we get in there? And I said, I'm sure it's too late, but let me check. Well, they didn't go in with a pitch, they went in with a solution. And they got the nod to provide this infrastructure. So with seeing things happen so fast and so well, to the point where yesterday, when in my conversation with them, they told me that a significant portion of their clientele now utilize an AI native operating system, and it's not like it's about to happen; it's happening. So I think it'll be essential. Where once digital enablement was a good thing to have, now it's a necessity. No longer are our MGA is going to be able to build their own underwriting matrix on an Excel spreadsheet or do a mail merge to issue policies. And don't think they didn't do that, right? So no longer will that be acceptable. No longer will things that were just recently okay because they were good underwriters who grew premium, no longer will that be acceptable today.
Can't help but ask, Stephen, is Tag Financial using AI for that basic blocking and tackling, as you put it?
Oh, it's incredible. 2 years ago, I was at a conference and I was asked if I use AI, and I said, "Why would I? Ours is a relationship business." Well, you have no idea. To start it, he said, "Why don't you take one of your pitches that you get and put it through AI?" I said, "You mean a PDF?" Sure enough, I started to use it that way. It read the PDF. I got an opportunity that I would not have looked at because I would have had to read it, summarize it, find someone to look at it and explain it to them. I just can't take pieces of paper and say, here, look at this, and you tell me if it's good. I've got to add some value, right? So I tried it. And sure enough, I said, look at this. I started to have a conversation with ChatGPT and say, tell me the competitors, tell me what it's like. I said, okay, craft an email for me to 2 investors, one of which did the deal that I would have thrown away. But it's more than that. Now we're using it for due diligence. I've actually went on to ChatGPT and said, you know me now. It does know me pretty well. And I said, tell me in my due diligence practice, how you can help me. And ChatGPT is an excellent salesman or woman, because it gave me 9 areas that it could help me. And I said, let's go with number 3. And I put a general ledger in, and it identified non-recurring journal entries, things that look suspicious, a P&L timeline. So it just completely accelerated that due diligence process. And if I don't use it, I'm worried that I'll fall behind. I use this, but I think other people have too. I won't be replaced by AI. I'll be replaced by my competitor using it better than I use it. All right, so I think that's the case. But the best use case is I was on the way down to Washington, D.C., and one of our roles in M&A or capital raising is to compare a letter of intent to a stock purchase agreement and say, did everything get in there? Well, that's a big task. I asked AI to do it. It did it in 9 minutes. And just for the fun of it, I asked it, okay, could you draft that part of the SPA? That's not my job, but I might as well. I had a whole train ride to go. And sure enough, not only did it draft it, it referred to other parts of the agreement and definitions. And what's my risk? I gave it to an attorney to look at and say, hey, you guys do a lot more than a traditional investment bank. So yes, we use it. And I'll finish this way. I know I had a lot of coffee today. Here's an interesting part. I sat with a young associate and showed him how I wanted to get more narrative around financial statements and in our information memorandum. And we put it through, we drafted it, we went back and forth, and I looked at him and said, do you use AI this way? And he said, not at all. And I said, shouldn't it be you, the young guy, telling me, the old guy, that I should try and use it like I try to teach my parents how to use a computer? So it's really something. So that question, you set me off, Jonathan.
So you're a convert turned evangelist is what I'm
Oh,
hearing.
believe me, we can't afford not to be.
Matthew, what impact is private equity having on the evolution of the DUAE sector?
So I would say that at a headline level, what the impact that PE is having is really accelerating both, the establishment, the building of scale, but also consolidation. In other words, kind of life cycles are really being compressed in the insurance space. Now, of course, the other thing is that, and if we go back to what I was saying earlier on, good private equity investors that have got a real deep understanding of the insurance industry are also bringing capital discipline. They're bringing operational rigor. They're bringing advice to the table as to what they've seen before. Now, again, you have to make sure that you have the right partner. You have to make sure that you're not growing too quickly, that you're preserving the underwriting profitability that's in the book. And then in addition to that, I would say that we're seeing this kind of shift towards kind of more whole account type structures. Again, kind of private equity capital coming in to support sidecars and similar vehicles that can support broader, more strategic arrangements. But again, coming back to, if you have a really skilled private equity partner that's got that experience in insurance, you are kind of being grateful, I guess, for the increasing scrutiny that's coming on underwriting results, because ultimately these private equity deals are built, or these investments are built around the assumption of a later exit. And that exit isn't happening if you don't have the underwriting results that you can point to and the credibility that comes with, again, building a strong portfolio over time. So I would say it's overall very, very positive.
Yeah, I would also say there has to be alignment. You're absolutely right. A short-term capital partner may not be around for a line of business that takes a long time to develop actuarially. So you want that alignment there. You want that support.
Absolutely. And we're seeing some of that too, where we're seeing predefined exits because of that, right? An LPT 4 years down the road, or a commutation 4 years down the road, adding that to an investment thesis or investment structure is really going to help. So we're seeing the growth of that, where it used to be something we used to model in and say, oh, sure, after 5 years we'll LPT out, right? But now we're making it part of this structure as part of our negotiations with capital.
Matthew, how are carriers evaluating potential partnerships with DUAEs today?
I would say if we look across our portfolio of partners today, the one thing that those partners have in common is that they are, by and large, insurance companies, but without the balance sheet. And to come back to Stephen's point earlier on, they've got that operational rigor. They focus on governance. All of the things that make insurance companies special, they're bringing to the table. And I think that's really, really important as a kind of starting point for many of the conversations that we're having. But other than that, I would say it's things like a focus on underwriting track record and the loss ratio history. But we're also looking at things like cultural and strategic alignment. Is this group that we're sitting across from the table with the group that we want to be spending a lot of time with over the next 5 to 10 years? Are these the people that we want to be in the trenches with when things go wrong, as they often do in the program space? So that's also really, really interesting for us to make sure that we're just on the same page. We really want to make sure that there is evidence of data transparency and making sure that, again, when MGAs are talking about reporting, they've actually got the capabilities. It's, again, a case of show me, don't just tell me. And again, we really want to make sure that we're seeing kind of this preference for long-term partnerships. We have, on average, we have multiple programs per partner that we work with at MS Transverse. That's something we're really proud of, because when you have a single program with a partner, you get to know that program leader. You get to develop an understanding of how they think about that specific kind of product or specific kind of sub portfolio. But when you have multiple programs with that partner, you really get a sense of the underwriting philosophy behind that business. You really get a strong sense of how they deal with things when things go wrong. And those are the kinds of partnerships that we are really looking for. And then I think the final thing I'll mention is, as a hybrid fronting carrier, we work incredibly closely with the reinsurance market. And so we want to make sure that the business that's being generated by an MGA has got a home in the reinsurance market. And many of the MGAs or DUAEs that come to us are bringing significant reinsurance followings from 20, 30-year careers working on the carrier side. So that's really, really interesting for us and really can help cement a kind of prospective partnership and turn it into a real partnership over the course of kind of 6 to 12 months or so. But again, I would say come back to the beginning. It's really, what we're really looking for and the thing that we're really kind of seeking out are those kind of DUAEs that are, essentially insurance companies, but without the balance sheet. We'll bring that to the party.
Interesting. I saw an insurance submission, a reinsurance submission the other day without biographies in it. And I said, guys, I think we're missing a key component here. I think, if I were to look at that, it's the who is so important when it comes to delegating authority.
Still a people business.
Yep.
Despite all the AI.
Despite all the AI. We've got a few questions from listeners, from viewers. Stephen, how does your firm advise your clients regarding the various MGA platforms out there?
I think if the question is, how do we advise our clients, who to invest in? I think, or when we pitch an MGA, we're looking to make sure that we are getting them ready to sell. So we almost do a sell side quality of earnings review where we're getting that MGA ready so that when we do go out, we can represent that this investment is not only safe and sound from an operational and business point of view, but from a compliance and internal controls point of view. And will be recognized that our clients, so are the MGAs, our clients are that are trying to sell, or on the buy side, those that want to buy it. So we get to see both sides of the equation. So there are some arguments that I put down on one side, and then don't hold this against me, but I make them on the other, right? Because I'm allowed to. I'm an investment banker. So so that's what we say. Just be prepared, be ready. People that want to go into to invest in you are going to be asking the questions that Matthew asks, and rightfully so.
Matthew, a viewer asks, how do you at MS Transverse handle programs in which the MGA has 20 plus markets and you are not the primary stakeholder?
So one of the types of conversations that we've been having more and more over the last 12 months in particular is where we've been talking to DUAEs that do have many, many partners, and they're coming to us with a view to consolidating that number of partners. They recognize, for example, our AM Best rating. They recognize the expertise, the oversight that we bring, and they're kind of saying to us, actually, we'd love to take 6 programs with 6 different partners and consolidate those into one home with MS Transverse and build a truly kind of strategic partnership. That's music to our ears. That's a conversation that we're always happy to have. We don't, bend any of the kind of requirements that we have when there are multiple programs that we're looking at. We still have very high standards. We're still very, very thorough. But it's a really good way to accelerate the conversation around how we can partner. But ultimately, many of the successful MGA platforms that are out there are going to need to have multiple carrier partners to be successful over time. And we're very happy to work alongside those other carriers to help our MGA partners be successful over time.
Interestingly, there's another side to that question, which is how do we handle MGAs who don't have a lot of carriers? Where they're either exclusive or there's just 1 or 2 markets that are right on their behalf. I may be the only one making an argument that that's better than just the MGA, just a single MGA, an MGA that also owns a carrier. And what we do there is try and use that carrier if we're taking them to market to maybe reconfigure or rejigger what the role in risk transfer is for that carrier that they're using. Maybe it's not the primary carrier now. Maybe it's taking risk on a retrocessional basis after we do something. So I think there's a lot of value in an MGA with a carrier and just one carrier that sometimes it's a risk. In fact, maybe more than sometimes, but there's an opportunity as well.
I think that definitely is supported by the data that we have in our report, where we look at exclusive and non-exclusive agents relationships from 2018 to 2025.
Yeah.
Stephen, a viewer asks, do you see a trend forming in financial institutions investing in special purpose vehicles, for example, Lloyd's?
Yeah, I do, of course. I think because things are now easier to invest in, because you can focus on investing in that captive, in that sidecar, in some vehicle where you're taking risk at different layers or at, at different parts of the stack. I think that is making it much easier and much more advantageous for financial institutions to make investments. That's what we're seeing, that alternative capital come in. And it's the unusual suspects now that may be driving a lot of the transformation that we're seeing.
Stephen, what should insurance professionals who are unfamiliar with DUAEs understand about their future role in the industry?
Well, I think that they're going to have to get familiar with them because they're here to stay. This growth is not a bubble. I may be wrong, but at least take a couple of years before someone could say, I told you so. But I think I'm right. And I think this is not a bubble. This 5 years of sustainable growth is going to continue. It'll transform. It'll become more professional, more institutionalized, and like everything we're talking about. But see this as that person in that dinner table, that rectangular dinner table that's pivoting between risk capital and distribution and technology and capital. See them as the orchestrator of the insurance ecosystem.
Matthew, how are reinsurers supporting DUAEs as they come to market?
Well, we're very fortunate at MS Transverse to be partnered with some of the largest and most sophisticated reinsurers out there, and we're very grateful for their support. Over the last few years, we've seeded several billion of incredibly profitable business to the market, and we're always looking to build on those relationships that we have. There are three things that really come to mind. The first is the obvious one. So reinsurers are providing quota share and other different structures to support programs that are either in the market or looking to renew. But increasingly what we're seeing is that many reinsurers are bringing actuarial and other risk management kind of expertise to the table. They're looking to get closer to the MGAs themselves. And then finally, what's really interesting is we're seeing more and more of the kind of portfolio solutions type units within reinsurers. They're bringing multi-year, multi-line capacity commitments to the table, which in itself kind of increases the value, as I'm sure Stephen can talk to, within these MGA businesses over the long term. So many different ways that we're seeing reinsurers kind of come to the table and engage with the segment, and long may that continue.
All right, well, what a great discussion we have had here today. Before we close things out, let's go around our panel and get everyone's closing thoughts on what they think the big takeaway is here today and what they would like our viewers to remember. And Matthew Jones, why don't we start with you? What do you see as the big takeaway here?
From my perspective, the MGA segment is here to stay. The MGA segment is a proven and established part of the insurance industry. And for those folks that are building exciting new MGAs or have got existing MGAs that they're looking to expand, please don't hesitate to get in touch. We'd love to have a conversation.
Thank you, Matthew. Stephen Nigro, what would you like viewers to remember about our conversation today?
Well, if my passion hasn't come through, then I haven't done enough. But I certainly think I agree. If you had asked me first, I said the MGA is here to stay. It will be pivotal. Product will be developed faster and brought to market faster. And we are entering into an exciting time, not only on the investment banking side. I'm going to see a lot more activity because of this, because there are different entities now that will M&A and capital raise, all right? But this is here to stay, and it is exciting, and it is different. This hasn't happened in decades.
Thank you, Stephen. Jackie Lentz, you get the last word today.
Thank you. The DUAE market continues to be the go-to market for insurers and reinsurers, and our stable outlook reflects the balance between the headwinds and the tailwinds that we are seeing. So interesting times.
Thank you, Jackie. And thank you, panelists, one and all, for an outstanding presentation today. We would like to let our viewers know that we will have a full replay of this briefing posted within the next day or so. We'll have a full transcript out within the next week or so. For AM Best, I'm John Weber. Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.